and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options in place in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options in place in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Monday, September 29th, 2025. I hope everybody had a good weekend, and I hope everybody's having a good morning so far. I noticed the market is a little green on my chart there, so that's not too bad. And let's see, we got a bunch of people in the room so far. Good morning to everyone. I know that Nathan is going to be out this morning, but Graham is going to be here any moment now. We'll get going on the live show. There he is. Hello, Graham.
Hey, how's it going?
Awesome. Did you have a good weekend?
Sure did. It was a nice, relaxing weekend. I got to shut the computer and try and just focus on the family, hanging out.
That's
and
always
recharging
nice.
for this week.
Yeah, cool.
Now it is pouring rain out here today in Jacksonville.
Yeah, it's a little wet outside for sure.
I don't mind it. It kind of makes for a cozy little end of September morning here. Hopefully you guys saw my message in Telegram this morning. If you didn't, give me a note. Or if you're not in Telegram, say no in the chat because I'll share my Telegram link. But here, let me pull up my screen here. I'll just cover it here again. Oops.
I can drop the link for your Telegram in there.
Oh, cool. Let me go ahead and share my screen. All righty.
Couple
Make
notes.
this full screen here. Okay, couple no's. Make sure to click this link here in the chat that Mr. Mound posted for us.
If you're not already signed up for Graham's Telegram.
If you're not in Telegram, yep. That's where I'll share information, some trade ideas, updates on the different positions we may be in. Here, we'll post that. I'll post it again since I asked you guys to say no while we were posting it, so I made it probably tough to click it. But there's the link right there. Now the update here, I'll say in a moment here. Typically, I do my market outlook on Tuesdays. You can see I did a strike through here. It's Monday. We're gonna do market training today. So important. This is we're coming to the end here of quarter 3 in the stock market. So tomorrow's the last day of the quarter. Then we're going to be hitting into quarter 4, which, as you guys may know already, and we'll see again today, quarter 4 is typically the best quarter for trading stocks. It's my favorite quarter. Typically very, very hot in the market, and that goes into the Santa Claus rally of Christmas. So what we're going to do is today I'm going to do my usual market outlook this morning. And then tomorrow, instead of doing my market outlook tomorrow, we're going to have a special session to prep for Q4. We're going to do a forecasting meeting, put together little portfolios, different stock picks we like for the quarter, and probably some options trades as well. Now, these are probably going to be the 3-month, 4-month hold options trades that are shooting for 200, 300, 400%, similar to what we did with the Dream portfolio. But either way, you don't want to miss it. But that's why I'm going to be doing my market outlook today, is so that tomorrow we can clear the calendar for a special forecast. And we're going to be having some special guests on as well to get their take, their opinions, their picks as well. So that's the important message for you guys this morning before we get rolling here. Now, for the morning market update, if you saw on Telegram again, I posted that this morning. We were up very, very nicely this morning. Every major market was up in the futures. Now we're seeing a tiny, tiny retracement since the futures market. I mean, the NASDAQ or the S&P was up 0.45 this morning. NASDAQ up 5.6. You can see the NASDAQ's running away here at 86, and the Dow was up 0.34%. Now it's down really flat on the day. But either way, big bullish moves across the board. Bitcoin is sneaking higher. I'm going to show you my Bitcoin chart that I want you to see here in just a moment. I did give a trade on it the other day. I'll post it here again in the chat, actually, before we get too far ahead. It was my speculative, and ignore the debit price here because it's up a little bit since we took this on Thursday or Friday of last week. But this is my bet on Bitcoin using ticker IBIT. I just posted it in the chat, basically saying that I bet you Bitcoin is going to be at all-time highs in December. I'm not saying that it's going to be at 150 with this options play. I personally believe that there's a very, very good chance that Bitcoin is going to be at $150,000 per Bitcoin by the end of the year. This trade I just put in the chat is just betting that it's going to be back at all-time highs. So not even that large of a move from here in the 120s versus 150s, and a huge payout. Now, here later in the week, maybe we'll do a more speculative one, shooting for that 150 max ROI target on Bitcoin. But either way, it's a good one to have in your back pocket, steadily moving higher, up 4% over the weekend. And actually, speaking of weekend, I might as well pause here. I know Nate's not here today, but just curious, did the weekend options hit?
Indeed.
I mean, I assume it has.
Indeed, it did. Indeed, it did.
I assume so with the markets up so big this morning.
Yeah.
So the winning streak continues. Nate is still perfect, 100% win rate on his weekend options. I wish I could say the same about my programs, but I think he's the only one here who has 100%.
Yeah, he went gladiator on us, and he said weekend options hit again. Are you not entertained?
I love it. Yeah, that's great. All right, let's get into it. Today or this week in the market news, we have President Trump speaking today. I'm not sure exactly what he's going to be talking about. He kind of slots himself in randomly throughout the week. Most of the time, it's not a market moving event, but every once in a while, you'll see just out of nowhere, it seems like the market will go crazy one direction or the other. You pull up X or CNBC and see that Trump was speaking then. Tomorrow morning, this is a big one, 10 a.m., consumer confidence. Just a note, if you're in the 60-minute income trade, if you're in that program, this is one that can kind of skew our trade. This is one that's worked for us and against us in the past because it's pretty binary. You'll either get a jump way up or a jump way down right when the report comes out. Now, I have noticed, this is just a little insight, I have noticed that you'll typically get that jump right at 10 to 10:05. And then from about 10:05 till noon, you'll see the markets fade in the other direction. So, for example, a way to play this tomorrow might be if the report comes out as a bad report, we see the markets drop all of a sudden. Wait till about 10:05 and look to do some short-dated call options or a short-dated bullish debit spread to the upside, because I have seen it over and over and over again where this report comes out and then the markets fade back to the direction where they were before the initial news reaction. So that's just a little nugget for you guys tomorrow. Maybe we can take a look at it in the opening playbook if you remind me. Similar thing on Wednesday, 10 a.m. manufacturing report. I've seen the exact same thing happen with this report too, so that could be a fun one to trade. And then later in the week, jobless claims and unemployment being a big one for us this week, although it is a little bit cluttered right now. Does the Fed care more about inflation or do they care more about jobs? We're kind of getting mixed reviews from different board members of the Fed. Some say jobs, some say inflation. Either way, both are very important numbers for us. Now, next week, there's nothing on the calendar just yet. All we see is Thursday initial jobless claims. I expect this will fill up as they add more events to the calendar. We'll take a look at it next week. For the charts of the week for you guys, I got 2 for review. Maybe I have 3. I have 3 for review, and then we'll get into some new ones. First one is, remember this. When the Fed has cut interest rates, when the markets are within 2% of all-time highs, over the next year, 100% of the time, stocks have gone up. We're not talking about a tiny move here. We're averaging 14% on the S&P over the next year. This is a very, very bullish environment we're in for the next year. Nate and I both believe that it's a massive market melt up. I believe you're going to see a lot of fear headlines. You're going to see a lot of people predicting a recession. They're not going to be wrong. There will be a recession. It's just a matter of when. I don't believe it's going to be in the next 12 months. I encourage you guys, don't let the emotions get the best of you. Don't miss this rally that we believe is going to come. And of course, we can't see the future. We don't have a crystal ball. We just have data to go off of. And data says 100% of the time, when the circumstance is exactly like it is right now, markets go higher. It's just stimulating the economy, stimulating the stock market. Another chart in review is the big gold bull cycle that we are in. We've been taking trades on gold over and over and over again. Gold hit new all-time highs this weekend. It's almost at $3,900 an ounce. The last time we were talking about gold was on Friday. That's 2-3 days ago, and it was at $3,800 an ounce. This thing is real. This thing is moving. You don't want to miss it. Relative strength on gold has peaked over the S&P for the first time since the 2000s dot-com bubble. Second time since the 1970s stagflation when gold went crazy. So this is a big super cycle you don't want to miss. All right, that's why I'm hammering your heads with it. Here's just a prettier updated version of my Bitcoin seasonality chart for you guys. I can bring up the one again that shows month by month, year over year, where it's every single data point broken down. But here's just the average look at it. So again, we're almost through September now. Bitcoin did not fall in September, which is different. That's unusual, if you will, for September. Typically, it's the one bad month for Bitcoin. But with that said, October, November, December, the most bullish quarter for Bitcoin. Very, very promising. Looking at the chart right now, looking at what's to come ahead. Let me just pull up a chart here of Bitcoin real quick to show you what I was hoping for. We may get there, we may not. Again, I don't take this like as the absolute roadmap for life. This is not saying that Bitcoin is absolutely going to gain exactly 27% in October. This just gives you a rough estimate of how does it normally do during this time frame. Very, very good going into the winter months of quarter 4. Now, let me go ahead and pull up my chart here. This is what I was hoping to see on Bitcoin. So hopefully you can see if I can get it to go full screen. No? Okay. Here's Bitcoin futures, and you can see here this is a weekly chart. This is not a daily chart. So here's a day. Oops. Here is a daily chart of Bitcoin, right? I'm going to flip to a weekly. We like looking at things weekly. It's easier to see momentum. My hope here was that Bitcoin, and let me just zoom out more, see if we can get a better view, that Bitcoin was going to come here. So you can see in these bull markets for Bitcoin, these bullish cycles, it typically comes to the 50-day moving average goes. This one dropped a little bit below, but went up ahead again, came back down to the 50 and went again before the cycle ended. Notice here, look at this. September, October, November. So this was, again, the end of the cycle last time around. Let's look at this time around. New cycle, new pattern, 50-day moving average is still the 50-day moving average. And remember, it's not 50-day, it's 50-week because we're on a weekly chart. So it comes up, touches the 50-week moving average, goes. Comes back, touches the 50-week moving average, goes. comes back, touches the 50-week moving average, goes again. My hope was that we would get a touch here before October. I don't think it's going to happen. But keep in mind, even if Bitcoin stays flat here, the 50-week moving average is going to catch up. If we at any point get a touch or a near touch, in my opinion, this is what I'm going to be doing. You take your own, decide what you want to do with your own risk measurements. But if we get close to a touch, I'm going to be buying big for that last run up where I've been telling you guys since February of 2023 that we're going to 150 in the cycle. Bitcoin was $16,000 or $30,000 a coin. Back then, I ran the numbers, ran the data. My prediction said 125 to 150, and we are still right on track for that. So right now, it can be a good time for buying Bitcoin. That's why I posted that trade in the chat. The easiest way to do it is via ticker IBIT. It's the Bitcoin ETF, just like buying SPY. However, if I want a high conviction trade, I really, really would love to see it touch this 50-week moving average again, which again, like I said last week, might be around the 105 price point. We'll see. Now, here's the key. It may never touch. I might be waiting for a pullback that's not going to come for a long time. I don't really have an example here. I guess this could be an example. Never touch. It came close. If it comes close, that's what I would do. If it comes a 105, 106, 107 range. But anyways, just cool to see this pattern over and over again, and now lining up here with our Bitcoin seasonality chart. October, November, December, very, very bullish. That chart was /BTC, Tim. That's the Bitcoin futures. So IBIT is going to be the same thing. It's going to be the ETF for Bitcoin. It's the same sort of thing, Tim, as if you're looking at /ES, which is the E-mini S&P futures, or SPY. Same difference. All right, new charts of the week. I'm trying to load you guys up here. I got lots of fun stuff. This one, looking at this one now, I wish I saw this one a few weeks ago because it makes me feel like kind of a big dummy here calling for a pullback. So how does this rally right now compare to previous rallies in the past? So here you can see previous rallies from the bear market or from major bear market bottoms. So for us, that was April when the market fell 20%. How does the S&P typically rally back from there? Well, right now, this black line is our current bull market. It's the fourth strongest rally versus all other bulls. Fourth strongest of all time. That's pretty cool. And this goes all the way back to 1957. So it's not like we're talking about in the last 3 years. This is a long time, over almost 75 years of data. Or is that 75? Yeah, a little over 75 years. No, I think my math's wrong. What is that? Not quite 75, but over 50 years of data. This is the fourth strongest one yet. At 116 days without a pullback, a 6% pullback, this rally has gone farther than all but 2 early stage bulls. This is a very strong rally right now. It's the fourth strongest of all time, second furthest without a 6% pullback. But get this. This is really important down here. And this is what I want to show you. On average, these early stage bull markets, the one we're in right now, typically last about 1 year, which is 260 trading days until the first 8% correction. So on average, you're looking about 260 days till the first 8% correction. 70 days until the first 6% pullback. We've seen neither. We are 116 days in, give or take, to this market. So if this stat holds true, that means we could be looking at another 100 days, more than 100 days, about 140 days from here until the first 8% correction. Where does that put us? That puts us in January, February range. So this suggests that on average, we could go all the way to January or February without seeing a major market pullback or breather. What's crazier about that is I'll show you the seasonality chart here in just a minute. It all lines up almost perfectly. Now, I wish we had a pullback. I really wanted one. This is crazy here too. If we look at all of the drawdowns in the S&P since May, since that tariff scare, the biggest one was 2.93%. We have not seen a 3% or more pullback in this bull run so far. So these pullbacks are very tight. People are buying the dip very fast and very large. And I think that this will probably continue to happen. Again, I called for a pullback back here in September. I think this was when I first made my prediction. Actually, no, it was in August. I think it was back in here. And it looked good at first. They bought it up. Started happening again. I said, here it is. They bought it up. Started to happen again. Look at the markets today. They bought it right back up. So this market is much stronger than I originally expected, than I originally anticipated. Whenever we're getting 1%, 2%, 3% drawdowns in the market, buyers are stepping in and they are taking control. of this market, which can be very, very good for us. I have been trading light since August, which has kind of been sad for me, but hey, better to do that than to be on the other side, I would say. A little nugget for you down here. According to Goldman Sachs, about 2% of the index has been shorted. That's the highest level since 2019. 2%. What does that mean right now? Does that mean the markets are about to crash? I actually don't think so. I don't think so at all. I think that actually what this means is that the market is actually in a spot to squeeze higher. We talked about short covering before. Is everyone here familiar of kind of what happened with GameStop, where there was a massive
We have a lot of new people who might have gotten into this since then, because that feels like a little while ago at this point.
There you go. So GameStop was a junk stock, still is, in my opinion. However, massive amount of
all the
hedge
Robinhood
funds
news made it more confusing too.
The what?
Sorry. I didn't mean to interrupt you. I think all the Robinhood news made it like all the Robinhood nonsense made it more confusing too.
Yeah.
Yeah. Go ahead, sorry.
Either way, whenever there's a stock that has a massive short interest, or a ton of hedge funds are short on the stock, meaning they have sold positions of the stock, their way of using a stop loss is basically, if the stock starts going up, if it starts going against them, how do they get out of their position? How do they unwind their short position? Well, if you entered the position by first selling the shares, you then have to close the position, go to neutral by buying the shares. So if you think about it, if you are short a stock and it starts going up and now you have to exit, you have to then exit by buying the shares. When you buy the shares, what happens to the stock? Stock goes even higher. So that is generally what happens on a short squeeze. Now, keep in mind, that's normally on junk stocks, very quick pops, then it's back down, very quick pops, then it's back down. What we're looking at here is a 2% short interest on the S&P. That's not big. You know, GameStop has like 30% typically, 20, 30%. And we're looking at 2% on the S&P. However, this is enough where we do get these small pullbacks and the buyers step in. Now those funds who are short have to close their positions by buying the S&P. That means we have, twice as many buyers going in at once when it goes against them. So this can fuel very, very quick rallies like we've seen here all year long. Very, very interesting stat to see overlaid with this chart, in my opinion. All right, let's keep on going with the bull news, because that's all I came across this week was bull data, one after the other. S&P is about to be up 5 months in a row. So when it closes out September here, let me just, September tomorrow's the end of September. It will be up 5 months in a row. So how does the market normally respond after a 5-year win streak? Well, let's look at the data. After a 5-month win streak, the S&P ends up higher 28 out of 30 times over the next year with a 12.6% average. This is crazy. So again, we just went up 5 months in a row, which to me sounds crazy, overextended. Like, we have got to chill out and pull back. Data says otherwise. Data says check your emotions at the door. Let's look at the stats and see what that says. 28 out of 30 times markets go higher over the next year, which interestingly enough lines up perfectly with this stat here with Fed cutting at all-time highs. 100% of the time over the next year, markets go higher. So if we're looking at here, typically over the next month, look at this. 71% of the time, markets go higher the next month. 93% of the time, they go higher over the next year. Very, very bullish stat across the board. It goes completely against my emotions right now. I want to be sure. I shouldn't say sure. I want to see a pullback happen. I feel like we have to have it. But the stats, the facts, are pointing the other way. Now, keep in mind, I do think we still will get these 2-3% drops, maybe even a 5% drop, 6% drop. But it just seems like this is a very, very strong bull market that we are running into a melt up here on, which is a good thing for investors. Here's a fun fact for you guys. I saw this one from the Motley Fool, which goes to it goes hand in hand with my philosophy on wrap orders and why they can be so powerful. Again, a wrap order is a 1-to-1 risk to reward ratio where we place a trade betting that a stock's just going to keep going higher. A good stock keeps going higher. Look at this stat. And I believe that gives us casino-like edge, casino-like odds, because stocks tend to go up over time. So if you get a 1-to-1 risk to reward ratio on something that is not 50% chance, it's better than 50% chance, you have positive expectancy, positive odds here. So S&P goes up 53% of days. It goes up 62% of the months, 74% of the years, 94% of the decades. Longer you hold, the more the math favors you. For me, the cool nugget here is with our options. This gives us a winning edge with the wrap order. This is just proof to the pudding here that markets do tend to go up over time. And if you can get a 1-to-1 risk to reward ratio on wrap orders, that can play very, very favorably to you over time. All right, there's my chart data dump on you guys today. It was a lot, but I thought it was a lot of fun. Gets me excited.
Good stuff. Yeah.
Yeah, for earnings this week, we really don't have much. I mean, this is about as big of a snooze fest as you can get. Nike being the biggest one on Tuesday. This morning we had Carnival Cruise Lines. I have no clue how they did. Let me just look at it. Not really going to affect my day too much. They're down 2%. Looks like they had a pop this morning. Either way, very, very quiet week for earnings coming up. Market overview right now. Last class, I told you I'm giving up on my pullback. It's going to come at some point. It's funny. The market sold off immediately after I said this. They made like a 2% drop, 2-3% pullback within like minutes of me giving up last week. But here's my conclusion. Here's what I've been saying all along. I'm still going to trade bullish. I'm just going to keep a lighter position size until we get a better buying spot. So again, all of the data is pointing bullish. As you'll see here in a moment, the market internals are somehow still pointing bullish. So we're going to keep trading bullish, but I'm not going to take huge options positions until we get a higher conviction entry. Higher conviction in the sense that it's just, we just had a breather, which means the odds are a little bit better in our favor for the near term. Long term, 12 months, I think the odds are totally in our favor. So if you want to take something further out, go ahead, be my guest. I have some positions that are further out, but for the short near term, I'm just going to be continued to trading light. So where are we now? Well, again, we had that ascending triangle breakout here in the S&P. Went higher and higher from there. Looks beautiful. We have momentum here. I told you for a while momentum was decreasing over time. We're seeing that divergence where markets were going higher, momentum's going lower. I expected this to turn red. It got close, never did. Now momentum is going hand in hand with the market. Markets are going higher, and so is momentum. It's been a great time to be long stocks. So where are we with the internals right now? Back to neutral, right back in the middle here, which again is pretty crazy to me, considering that the markets are pretty darn close to all-time highs. I mean, we're within, let me just look here to give you a number. We're within 0.3% of all-time highs on the S&P. Meanwhile, market sentiment is neutral, not greedy. Doesn't make sense to me. All right, keep going. CPC, this is our put to call ratio. Look for good buying signals or profit-taking signals. We still have nothing. We are still right in the middle, meaning that the buyers are in a very healthy spot to continue buying this market. Again, my emotions say the complete opposite. They say there's no way this could be possible. But the data is right here, and the data says that we can keep going higher. Doesn't make sense to me, but hey, we'll follow the numbers here. Seasonally speaking, here's our average monthly returns for S&P. It looks kind of similar to that Bitcoin chart as well. October, November, December is the best quarter for stocks of the year. Always historically the strongest quarter for stocks, best 3 months in the markets. You don't want to miss it. And that's why tomorrow we're going to have a special session at 10 a.m. where Nate and we're going to have a couple of guest speakers on as well. I believe Roger will be on, maybe Kane, and a few others. And we're going to put together our quarter four predictions. We're going to pick some of our favorite stocks for the end of year rally here. And then we're also going to give some options plays as well. So you don't want to miss that tomorrow because here's the big reason why. It's very, very good. And you saw the other data pointing towards a very healthy market right now. Presidential cycle, same story. I'm not going to spend too much time here. We've been blowing this thing out of the water. This is one of the best years for a new term in a while. We didn't get that August and September pullback that we were supposed to, seasonally speaking. And now it just looks like we might add more fuel to the fire here with the rate cuts going on. So my upcoming prediction, I think we're just going to keep chugging along in this trend. Yes, we will get dips. But again, I with that short interest at 2% and buyers stepping in so fast, the dips might be 2 to 3% pullbacks, and you just buy that every single time for the next year. There's a really good chance at some point over the next year we will get the 6-8% pullback that I've been looking for, 5, 6, 7, 8%. But either way, we've got a beautiful bonfire going, and we've got gasoline pouring from the clouds right now on it. So I think that this is just going to be a great buyer's market for the next year or so. So let's look to buy these dips when we can. Sector view. Here's the sector breakdown for the month of October. As you can see, it's one of the few months in the year where every sector is historically positive, with a few of the best ones being info tech, financials, consumer staples, and healthcare. Obviously, you guys know tech is one of my favorites there. Financials has been really good to us. But some of these others I like a little bit better than probably staples right now. But I'll show you here. For the sectors, here's what we had for our strength. Again, remember we added in gold, TLT, and the Russell 2000 just to get a better look. I didn't want to keep missing out on small caps going higher because we just actively weren't looking at them. This week over week shifts, there's really not much. It was a quiet week in the markets. We had that pullback, and now we're seeing the buyer step right back in again, like they have been doing all year long since the April tariff scare. But communications flipping over Russell 2000, but not that big of a move, not that big of a change. Both very strong. Utilities, financials, still right here in the middle, just flopping a spot. Bonds, materials, again, nothing crazy going on here. So again, for my top sectors, notice if you've been following along the last 2 months, this has been very slim pickings. I've given you probably 2 or 3 sectors each class. Say, let's just focus on these because they're seasonally strong and they're relatively strong right now. Well, now we have this market where we know every sector is good right now. There's some outliers, but each and every one is bullish. We know historically the market's bullish. We know internally the markets can go higher from here. So we're going to open up our arsenal a bit and trade the top sectors, top indexes as well. But again, just still not a time for me to be going heavy on bullish swing trades. I think we probably still will keep going higher here against all odds, just going and going. But I would rather take smaller profits at a time like this than risk losing a bunch right now, if that makes sense. So for our top sectors, technology, communications, we've been trading these all year. Discretionary industrials, I really love industrial still. Utilities and financials are also looking nice. But if I had to pick 3, it would be technology, communications, and industrials. We know gold is very, very strong. You don't want to miss it. Bitcoin's going to be very, very strong here as well. Also one that you don't want to miss. The reason I skipped consumer discretionary is because this one can just be the most volatile right now, dependent on jobs reports and unemployment and interest rates. So this is just, if there's good opportunities, I will take it 100%, but it's not going to be my main go-to. Like technology is who I just think is absolutely dominating with the AI stuff right now. Same with communications, very similar. Actually, communications, if you guys have been around for a while, this was originally part of the tech sector, and then it split off to its own sector. So those
Before
are
you leave that slide, if you can go back, Brad was just asking, what you consider a heavy option position compared to what your normal position is. Like when you say you're not going heavy on these.
Yeah, for me, a heavier position would be like the heavy. Actually, I shouldn't say the heaviest. I've done some crazy ones. It's funny. I swear, every time I do a massive one, it never works out. So I need to I like to kind of map out my numbers that I'm good with and stick with that. Typically, my low end is going to be $500 to $1,000 a contract. My mid level is going to be between like $1,500 to $2,500, and then my heavier is going to be $25,000 to $5,000 per position. And now, keep in mind, because we do this show every single day, like I end up with a ton of positions. Typically, like if we weren't doing the show, I'd probably have 3, 4, maybe up to 7 or 8 that I'd have open at a time. But because we're always firing off picks for you guys and trades, Nate as well, we end up with a whole bunch of positions. But generally speaking, the ones I like the best, that's my typical go-to. Now, that's for me, my preference, my account size, what I'm comfortable with. Like I mentioned last week, the question I like to ask myself before saying, before putting a number on what my position size may be, is I like to ask myself, if I were to lose 10 trades in a row, keep in mind, I don't think we've ever lost 10 trades in a row, but that could happen. So I asked myself, if I were to lose 10 trades in a row, what is the number that I would be comfortable with losing? I always start there and work my way backwards. If I wanted to risk, I don't know, if I was only comfortable losing $5,000, then I would have a $500 per trade position size, because that would be 10 trades in a row. 500, 10 times in a row would lose me $5,000 in worst case scenario. So hopefully that helps you guys out with picking your numbers for position size. Some people will do it as a percentage of account, which is fine. But the problem is everyone has different accounts. Like for me, I have a trading account. My trading account is not my major stock account. So for me to say only trade with 1% of my trading account, it would be a much different number than if someone has $1 million in the stock portfolio and I say trade with 1% of that account. So I have a trading account. I use position sizing, not a percentage basis, if that makes sense. All right, let's go to the Apex top signal of the week. I'm going to pull up the Apex indicator. We'll take a look at it, have some fun here. Of course,
now it's the Apex software.
That is so true. Thank you for correcting me.
The new and improved.
If you've been around the block here for a bit, you know it's not the Apex indicator anymore. It was a trick question, and Dave, you were all over it.
I'm glad I passed.
Mm-hmm. All right. I'm going to go to the portal here. Of course, it's in your one-click trading portal if you have the membership. I'm going to come here to the Apex software right now. Let's go ahead and flip here, see if we had any new signals this week. And I'm hoping it doesn't. Oh, it might have refreshed for me. Oh, no, there we go. Let's say because it's a Monday. I don't think we had any new ones this week. But again, I really liked O'Reilly. I don't even know what O'Reilly's doing today. Haven't had a chance to look. Oh, it's up another 0.5%. Woo, O'Reilly's looking good. That is a beautiful stinking chart. I have so many O'Reilly options on. Wow. Let me give you guys the O'Reilly options here as well. If you missed on I just posted them right in the chat. All right. If you missed on Friday, there's O'Reilly. It's a beautiful stock. It's a beautiful pattern right now. We know that it wins 91% of the time with the Apex pattern over the last 5 years. It's really, really good. If you want to trade the call option, you come here, click the call option. I'll just give it to you guys here in the chat. This is O'Reilly is the ticker. I'll give you a couple trades here just because we're having some fun here.
Nice.
There's the O'Reilly basic call option coming in the chat right now. $5.50 gives you a little profit schedule down here. If O'Reilly's hits the profit target at expiration, you make 71%. If it hits it, in the next 2 weeks, you make 111%. Not bad, right? Let's go ahead and see if we can find something better, though. The wrap order. This is at the current price. It's the keep in mind O'Reilly has weird strike prices because of the split they just did. I'll throw this in the chat. Look at this. Apex software is so smart. It gave us a little warning here. Low ROI potential here. Man, this thing is awesome. Typically, for my wrap orders, I want to go for 80 to 120%. So it just flagged that it's just below 80%. So keep that in mind when placing the trade. With that said, where O'Reilly is right now, let me just give you a number. O'Reilly has to move 6 cents. That's hard to say. I hope it moves a penny from here so I can say a different number. 0.06 from here over the next couple of months to pay 79%. I think this is crazy. I just don't know any other way to beat this style of trading. But here it is in the chat. I love that the Apex software at least gives us this heads up so we know, hey, let's take a moment. Let's evaluate this. Let's make sure. And for me right now, this is like a no-brainer. 80% return on O'Reilly. Now it has to just not lose 1 penny from here. It's over that threshold now. So
that's
super
crazy.
Cool to see that. All right. And that's the wrap order. So that's their more conservative play. So call option trade, you needed it to go to the target, which is about $10 from here. So pretty decent move for it to pay 100%. A wrap order, you need it to right now. It could just go flat for the next 2 months and pay that. All right, but if we want to have some crazy fun, let's go for the max ROI spread. Again, Apex software looks at the target price. It uses that target price and it uses our average hold time to then select the options. Super cool, super awesome. Here it comes in the chat here in a second. This one here, and I have this one open. It's aggressive. It's aggressive, my friends. But again, the payout here is 309% at expiration. So there's a more aggressive trade on O'Reilly from the Apex software with a massive, massive payout on this super boring auto parts stock. So enjoy that one.
Bill O'Reilly is so insulted.
The what?
I said Bill O'Reilly is so insulted.
Yeah. I bet.
It's a boring auto parts stock. It's like his whole life.
Sometimes boring is good. You know, actually, a lot
yeah.
of the times
Boring is usually good
I
on
think
our
Warren
side.
Buffett.
Yeah.
You know, if we had time for him to come on our show, which we just don't have time for Warren Buffett. I'm just kidding. If Warren Buffett came on our show, he would be saying boring is best.
Yeah.
So, let me go ahead and see what else we got here. We'll go ahead and take a look. I did see. Actually, I'll cover this other one in a moment. All right, NVIDIA is the one I wanted to show you guys. I just want to make sure there wasn't a different one. All right, NVIDIA here. Oh my goodness, up 2.8% today. Is NVIDIA at all-time highs? It's got to be pretty darn close. Really close to all-time highs. All right, NVIDIA's heating up. Just hit 1, 2, 3 in a row here on NVIDIA. Awesome setup here. It actually had the signal dipped a little, and now it's above that signal, but you can still get in and trade this. 85% win rate over the 5-year period. I can't get enough of this stock. Let's go ahead and take a look at the call options here. I'll just throw it in the chat. I'm not going to trade the call options on NVIDIA, but if you want to, there it is. Here's your profit schedule down below. Look at the returns here. Again, I give you guys the call options. I built this into software just because so many people ask for it. So many people want it. But I hope the more time you spend on this show, you quickly realize that call options are just simply not the way to go more often than not. They are, I think they're a Ponzi scheme for retail investors or a way for market makers to make lots of money on us. That's my opinion. Hopefully I guess I shouldn't say hopefully. Maybe you'll come to the same opinion if you spend enough time around Nate and I. That's why we have things like the wrap order.
I think you want to qualify that because just for the people that maybe don't understand, the things you do like, the wrap orders and the debit spreads, they are options, but they're trading options a particular kind of way. They're not just straight calls or straight puts.
Yep. 100%. Yeah, we still trade calls. We just trade it as a spread where we're simultaneously buying a call and selling a call at the same time to offset our time decay risk, offset the extrinsic value, that premium we're paying, and typically get better risk to reward ratio. So here's a prime example of that. So I just sent you guys a call option there in the chat. Let me go back to the software here and let me give you the data. If NVIDIA hits this target by expiration, you lose 4%. Look at this. Look at this right here. If you're right on NVIDIA, and we're not talking about NVIDIA getting $2 from here. If NVIDIA goes raging hot, it says wrap order showing the wrong spread value. I'll look at that in a sec. If NVIDIA is raging hot, red hot, goes and hits your target, you were right on the stock. You nailed it. You are a genius and you lost money. It's just basic call options. Typically, there are instances where I'll trade them, but typically they just take your money. All right. Now the wrap order, on the other hand, if NVIDIA is above 185, the last one needed NVIDIA at 195 for you to lose money. This one needs it at 185 or better to make 108%. Do you guys see the difference there? One, you needed to move $12 from here to lose money. The other one, you needed to only move $2 or more here to double your money. All right. Now someone said the price is wrong on NVIDIA. Let me go take a look at it. It should be pulling the real-time data here, October 10th on NVIDIA, 182, 185. What's cool is we took this one last week, and it's already updated. I've got the price here. It's at 125 right now. I mean, it's pretty darn close to what I posted there in the chat. I'll show you. Here's NVIDIA, 128 now. Let me see if I just get filled at 125. Filled right away at 125 on NVIDIA. That's a 1-to-1 risk to reward ratio betting on NVIDIA to go higher. Meaning I put in a buck. Oh, you're saying right here, Jimmy? Yeah, it is. That is. Oh, I bet that's because that's the entry price of the original signal, not the current price. This is wrapping the current price right here. Hopefully that makes sense.
So to answer Buckeye Lynn, a wrap is a type of debit spread. It's just a particular type of debit spread. Instead of both your strikes being above or both your strikes being below the current price, it's one below, one above. So you have room on either side a little bit.
I see what you're saying, Bob. You're saying this. Should say 250.
Yeah.
Let me go send that to the team, to the coders who are awesome, very responsive. Thank you, Bob, for noticing that. Everything else should be right, though. Thank you, guys. All right. Now, if we want to get aggressive on NVIDIA, we want to go for gold here. We had a crazy one last week. Actually, let me see what it's up. It's got to be up pretty good. Oh, no. I think I gave it to you guys in the chat and didn't take it myself. Did anyone take the NVIDIA trade from Friday, the aggressive one? It was like a 1,500% payout.
You want to know what it was, or you just want to know if somebody took it?
I mean, it's going to be the same options.
Yeah.
Because it's going to be target price. Curious if anyone took that. It was like a 1,500% payout. It's got to be up huge.
You might have said something like you're already in NVIDIA so much you're not taking it, but I don't know.
Yeah, just the basic call options are up 117%, so the spread's got to be up huge. All right. Our JB did. Curious how much you're up if you guys took the aggressive one on NVIDIA last week. I did not get it. I've got tons of options on NVIDIA, but not the aggressive one. All right, NVIDIA. This is our max ROI debit spread here. Again, this is going for that target price. This is probably not going to win more often than not. Like if your odds are 50% here, you are going to be a billionaire. So what I'm trying to say is your odds are not 50%. You know, of a win rate. You're probably going to have a 40% win rate trading this way. But when you win, you're going to pay off 5 losing trades. So mathematically speaking, you only have to win about 16% of the time to make money on these trades. Luckily with the Apex, it's probably going to be closer to 30 to 40%. I really love this style trade, but keep that in mind when taking this position here. I'm going to throw one on right now so I don't forget again, just to see how it does. Again, likelihood of this working out, not high. When it does work out, it's going to cover 5 other trades. All right, awesome. John V, would it be beneficial to use a longer DTE on NVIDIA beyond October 10th? So great question, John. So right now the Apex software is looking at the entry date and then using the average hold time from there to select that option. So as you can see, we're already a few weeks into the trade, which is why that DTE is so short. So if you want to, you could just go down here and just pretend like you're entering it fresh and just move it out 27 days. So that would be what, 31st of October. You're going to have a slightly different strikes. But if you use the 31st of October expiration, you'd be buying the 190 and selling the 195. Buy, just for any of those who want to actually do it. Call. So that is if you want to give yourself a little more buffer. Now keep in mind your payout's going to be smaller because the longer the expiration, the less the payout. So you're looking at about a 203% ROI there, but also a much higher win rate because you're going to have more time. What's the main difference between Apex and Income Machine? Dan, they are totally different. Income Machine has nature rules, which I'm not even 100% sure what his rules are. Apex is using weekly chart price action to give us a unique blueprint of each individual stock. So NVIDIA's rules are not the same as Apple's rules, which aren't the same as Microsoft's rules. They all have very different rules. But when they fire, they typically give us a very high win rate for a decent return on the stock, but a really good return on the options. So that's my quick elevator pitch on how Apex works. Now, what I want to do, Dan, and for everyone tuning in here, what I would like to do, I've got a system, thanks to our new, I've been bragging about our technology team and how awesome they are. Like the Apex software is just one of the pieces to show you that. We've got one that looks at our trend patterns. It looks at our price action patterns. It looks at my seasonality, and it looks at the options market order flow and takes all of that into consideration to give us 2-3 really, really high conviction trades each day. What I want to do is I want to take that one that's looking, again, for the stars to kind of align on certain stocks and then produce for us a wrap order, a max ROI spread. It's what I want to, I don't know if I can say this, but I refer it to Nate as the lotto board, where we're going to be using these high conviction setups to go for high reward plays on options, where we're going to shoot for 100%, 200%, 500%, sometimes even more when all the stars align. That would be more like the Income Machine the aggressive version of the income machine, if you will. I am curious. I asked you guys last week, but maybe not everyone was here. If that's something that would interest you, to have a tool like the Lotto board up your sleeve, give me a yes in the chat. But also, I've got another question for you. If you would, let me ask you this. I'm going to give you two options here. Let me just type this out. It'll be easier. And then we got some more trades to do, so don't go anywhere. I'm just on a total rabbit trail. A and B. All right, for this thing that I'm going to build, would you rather? So I'm going to build this either way, whether I get yeses or not, because I'm going to use it. Would you rather have it select the options where it's going to give you three choices, either a 50% return, 100%, or 200%? So like a safer one, a little bit in the money for 50%, a wrap order at 100%, and an aggressive one, 200% plus? Or would you rather it do B, which is going to be a wrap order is the minimum, 200%, which is more of my elite trade, as the second option, and 3 to 5% as the high end? Would it be A or B? I guess I could do both. Yeah, this one's not conservative, Holly. This one's going to be a little bit more aggressive. You know what, actually? I don't even know if this is possible. Looks like a lot of A's, some B's, some boths. I'm just here like dreaming at the moment. I don't know what our tech team is capable of. They've blown my mind so far. I think they've blown your guys' mind with like Income Machine, Apex software, and some of the other things like Nate's overnight option software, which he is going to be actually, I think it might be live now for members. I can't remember, but
It is just not the VIP version.
Okay, gotcha. What if I'm just imagining this in my head. What if there's like a slide, like, so we have the pick and it's NVIDIA, and at the bottom there's a slider where you get to slide the percentage return you want to shoot for. I think that could be cool.
Yeah, I think we could accomplish that. That sounds
You
within reason. I would think so.
That'd be awesome.
I mean, I think like it might not be, it might not go by 1% increments. We might
It'll
have
give
to
you a
go,
ballpark.
yeah, but you might be able to go by 25% increments or something like that.
That would be
Yeah.
awesome. Just newbie here says 50, 200, and gazillion. Yeah, a slider would be sweet.
Yeah,
Of course, we'd still want to know what the expected move is, so you're not just blindly picking literal lotto ticket scratch offs hoping for the best, but like kind of like where it's like says NVIDIA here typically moves $5 when it's right. Here's the selected option. If you want to use a slider, you can.
Right.
That'd be cool. All right, I'll ask him.
Yeah, I do think that like I think for people who are newer, that might be dangerous, only because you've got people thinking like, oh, I can set it to whatever I want. That's what I'm getting, and it's like, well, we would need to have something that shows how their odds go down, or whatever. But we don't know that number. We can't show that numerically, like exactly what your odds are going to be if you're going for 1,000% on something that's only supposed to 10% move.
You'll show up and say, why would I go for 25% if I could go for 1,000? Turns out you just lose every time. Versus 25% you win every time. All right. Enough of that spill. That's cool. All right. Well, that's fun. We got to dream a little bit together today. For the hot sheet pick of the week, we've been crushing on these, having a great time. Actually, before I say we've been crushing, let me see if VST turned around. VST did not. So we're not necessarily crushing, although Tesla ended up like 300%. So I can't complain about VST being down 30% at the moment. With that said, our new hot sheet pick of the week is entering today. It's TSM is the ticker. It's expiration of it's a 19-day hold time where it seasonally has gone up every year for the last 10 years during the next 19 days for a 4.5% average gain. If you're using options here on TSM, of course, you're welcome to trade the stock. But if you're using options, you would be looking for the 17th of October expiration. I'll give you a wrap order here, and then I will give you also the max ROI profit target to trade. Again, this is something for the on-the-clock stocks members that I'm looking to build out with our new software tools, where it will automate all of this for you, much like the Apex software does now. Of course, if you are an on-the-clock stocks member, I'm going to give you that upgrade for free. Josiah called me the other day and said, oh, we should sell it separately as an upgrade. And And I just said, but why? It would be way cooler to give it to everyone for free. So that is the plan right now. Of course, still got to do some work on that to get it live for you guys, but that'll be cool. So that when we get to this segment, I don't have to come here to the options market and do all the manual work. All right, our ticker is TSM here. Let me go ahead and type this up. Again, this will be cool when it's automated, so I don't have to type it up. Because you guys know I typically make mistakes once a day. I'm probably good for one mistake a day between Nate and I. But we're going to use the 17th of October expiration. First thing we're going to do is wrap it to give us that 1-to-1 risk to reward ratio here on TSM, which means buying the 277.50 call. And we're going to sell. I'm going to type this up and post this in the chat. Don't worry. Sell the 280 call. Debit right now of 123, which is a little bit over 100% return on investment. This is a 1-to-1, well, pretty close to 1-to-1 risk to reward ratio. This one would pay if you get filled at 123. 103% by 17th of October. If TSM gets a whole whopping huge move, where is this? October 17th. Oh, I should have checked for earnings. Oh, man, they've got earnings on the 16th. So reminder here, you may want to close it out just before earnings. Either way, let me just show you how this wrap order works. 17, it needs to be above 280 right here. It needs to make a huge whopping $2 move. That's less than 1% on this stock. By the middle of October for you to make a little over 100% return on investment. Love wrap orders, love trading them. The risk reward is amazing. Like I showed you with that Motley Fool post at the beginning, typically stocks go up. Typically good stocks keep going up. TSM is one of those stocks right now, which is why I really like this trade. So I'm going to get 2 of these right now at 120. Thinkorswim does the math for me. And all I need is this ticker to just keep drifting higher, drifting ever so slightly higher over the next couple of weeks, which again, put 280 is that number right there. If it's above that line there, buy that line in the sand, we make over 100% return on investment. Ted, with the very, very smart warning here, earnings beware. We do have earnings on the 16th, so look to close it out on the 15th. Set a little reminder there. Set a little, let me pick up my phone here. Hey, Siri. See if Siri works. Hey, Siri. Can you remind me on October 15th to sell TSM? Reminder has been set. Just like that. So that's if you want to get out before earnings, which I think is a smart thing to do here. All right, typically TSM gains 4.5% here, which would put us, let me just do the math here, make it easy. 277.55 times 104.5 at 290. So if you want to go for the aggressive, that max ROI spread that says seasonally this typically goes to this price, so let's go ahead and trade it for that price. We'd be looking at 290, which this is going to be a pretty astronomical payout if I had to guess. Let me go ahead and post this in the chat. Remember, this is high risk, high reward. The wrap order is going to be a much safer play. Again, remember, set that reminder on your phone to close out before earnings unless you want to let it ride. If you want to let it ride, I'd probably use this more aggressive play, not the wrap order. Here's our more aggressive play on TSM. Right there, it's a 75-cent debit. We can go ahead and just ship one of these off. 175. This is a 233% payout if we're right. So if TSM does seasonally what it normally does, you make 233%. I'll show you on the chart here. It's a little bit more aggressive, 290 by 1017. So it's up here. It's just moving at that same trajectory it's currently at. If that happens, you get paid big. Keep in mind, earnings are coming up. Earnings are on the 16th before the market. So set a reminder for the 15th to close out TSM. If you hold it past the end of day on the 15th, you'll be stuck to earnings, which might not be a bad thing. It could pop on earnings, maybe a great thing, but you just don't really know with earnings because it's more of a dice roll. All right, real quick here, I'm just going to give you some tickers that popped up on Newton that I really like. I'm not going to give you trades on them today. We've got some good trades going right now. So I'll just post in here Newton. These are tickers you can look at for yourself. Punch them in the income machine. If you got the income machine, that could give you some. Of course, once I build this lotto board, I probably need a new name for it. I might just ask you guys to give me a name for it. The slider. what I'll do is I'll put a feature in there too, where you can type in tickers like this that I give you and use that slider feature to pick the options as well. But those are just some tickers I really like for Newton right now. As a reminder, real quick here, before we switch on over to the presentation of the day, the S&P 500. This is from the Motley Fool. I thought this was a really cool, insightful chart. S&P 500 typically goes up over time. You guys know that. Stocks typically go higher more often than not. Nate and I always tell you stocks are typically going higher 70% of the time. Where do we get that number? Right here. 74% of years, the S&P is up. So if you know that stocks tend to go up 53% a day, 62% a month, 74% of years, 94% of decades, then in my opinion, when you are using the wrap order each and every week, just going up after a strong stock to drift in the direction it's already headed, to just go up ever so slightly, even if it's 62% of the time, with a 1-to-1 risk to reward ratio, you make really good money over time. So we're going to pull up that class right now, because today, each and every Monday, I send out my newest pick for the week with my top stock and that 1-to-1 risk to reward spread. Sometimes we get a little bit more. We got 122% the other week on Oracle. But again, we're just playing into this phenomenon. We are rigging the options market to then gain what I consider casino-like odds on stocks to go higher, which they already do. I don't have to do anything crazy for stock market to go higher over time. It historically already does that. So if you want to jump in for that new trade, then stick around for this class. It's going to walk you through the options trade, how we rig it up, how it all works, and then how you can take part in today's trade as well.
Again, and you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings because, of course, you could lose money on any trade that we talk about. But every single trade here is based on real trades sent out in real time. This is not a back test. It's not paper money. The average return here, winners and losers, 32% per trade in 4%. Guys, that's winners and losers. That's the average return we were talking about. 66% win, and there's my favorite number, an average win of 93%, even though most of these stocks barely move. So obviously can't guarantee specific future results. There's always a high degree of risk. If you want to go through, just go to Prosperity. The market that you can take advantage of. Trades costing right around $1, right around a good George Washington there to get in. And with this unique trading method, he's been able to watch as these trades double in just a very short move each and every week. In fact, over the last 18 months, he's already done it 58 times, including multiple doubles on some of the stocks I just mentioned, like this dollar trade on Apple, which costs $1.24 to get in and paid 101% ROI by the end of the week. Or his $1 on NVIDIA, entering at $120 per contract, pretty cheap way to trade NVIDIA, and banking 108% by the end of the week. And then we had this dollar option on Google, which traded at 46 cents per contract and paid out 117% by the end of the week. You see, these money doubling opportunities on the dollar options are all thanks to a little known trick to rig the options market. And yes, I actually mean rig. It's a trick that very few people know exists. I'd guess that less than 0.01% of traders have ever taken a trade. As a matter of fact, I personally work with dozens of trading experts. I mean, a lot more than that in the last 10 plus years in the financial markets. But I had never heard of it until my special guest shared it just recently. Honestly, when he first told me about this, I didn't believe him. I didn't even think it would be possible to trade the market this way, because he claimed that unlike most options trading methods out there, where you need a stock to move 5%, 10%, sometimes even more to double your money, by rigging the market with these dollar options, we're able to target right around 100% ROI each week, even when the stock barely moves. That is my favorite part of everything you're going to learn today. For example, take a look at what happened with one of his trades on Apple. So during the week of June 24th, Apple is chopping around, going nowhere fast. We've seen Apple do a lot lately, and the stock gained 1.1%. Now, most investors would make next to nothing there, and option traders were probably hoping to break even on a 1% move. But with the dollar options, each one costs about $1.21 per contract to enter. folks could have made 106% by the end of the week. Now, guys, does that chart look like a 106% gain chart to you? No, most people are not making 100%. The price of Apple barely budged from June 24th to June 28th, which would have been enough to turn $500 into $1,033 on that chart, or $1,000 into $2,066 for the week. Then the next week, he did it again. If you set your trade with him on July 1st, when he sent out the alert, folks would have gotten in for about $1.25 a contract. And again, watch as the investment more than doubled in a single week, enough to have taken $1,000 and turned it into $2,250 in just a couple of days, or $2,500 into $5,630. And keep in mind, these trades I'm showing are not from a back test. They're not a theoretical opportunity that you look back in the charts and could have found. Each and every example I'm sharing are from his live trade tracker, which he's been sharing in real time. Like the very next one, again, going for a double on Apple. This time, this was during the week of July 8th, going back to last year. Apple only moved about 1% that week. Again, most investors were probably falling asleep at the wheel, and option traders were starting to panic as that time decay is eating you alive. You're not making any money. But with this unique way to rig the market by using the dollar options, anyone could have followed along, paid $1.11 per contract to take the trade, and automatically cash out with a clean 100% ROI for the week. Once again, guys, does that look like a chart that you should have been able to make 100% on Apple? I don't think so. Common shareholders were left with pennies that week for every share. Now that 3 weeks in a row from real-time published trades where you could have doubled your money each and every week, and you didn't need the stock to make a big size move to see it happen. Depending on how much you want to start with, let's say $500, $1,000, $2,500, that would have been a shot, and this is just in those 3 weeks, to grab $1,659, $3,318, or $8,296. That's not even compounding. That's just $500 in each one, $1,000 in each one, in under a single month. Now, while that might sound too good to be true for some of you listening right now, let me reassure you, that is as real as it gets. He's been sharing these dollar options with a whole group of students just like you. And here's what they've been saying. Ken, 100% gain on Apple in 5 days. Greg said 1,040, 100% gain on NVIDIA tomorrow, starting with about $1,000 on that one. Ben, who saw winners with his first couple of dollar options, said my first 2 trades were both 100% in a week. And then Ed R., who had 4 trades, said this is the only trading methodology I use now. My winning trades for the week, AVGO 121%, SMCI 121%, Meta 90%, NVIDIA 109%. Or Richard said, hey, Graham, being conservative, I made $2,820 in the last 2 weeks with those dollar options. Loving it. Or Jim T said, I love so far. I've made over $5,000 using this strategy. Guys, these are from people who are not used to making 100% gains. They thought 100% gains were few and far between, and now they're hitting them on a regular basis because of this style of trading. And so today, my guest, I'm sure you probably know who my guest might be, is trying to bring on 50 new students to take the next dollar trade opportunity with them. So if it sounds like something you'd be interested in and you'd like to get in on the next dollar option, hang tight, because over the next few minutes, he's going to walk you through exactly how they work, why almost no one has been able to crack the code on these dollar options before, and the key insight that he's discovered that now allows him to rig the options market like he's the house at the casino, plus how to get in on the newest dollar option today. Yes, today. So welcome to Dollar Options. Thank you for being here. Like I mentioned, my name is Nate Tucci. Over the last few years, I made quite a name for myself by producing some of the top winning strategies available, like 77.7% on my overnight option. I'm sure most of you guys know about that one. 80.5% on two-way options, actually a little bit higher now, but who's counting? And then 100% win rate so far on the weekend income strategy. But if you follow my work, you know what I'm focused on. What I care about isn't the next moonshot AI stock. It's maximizing the bang for your buck in a systematic way. And that's exactly what the dollar option delivers, what it's all about. Not only are they very cheap to get in on, but they show the power to pay a 93.6% ROI on average each week they work out. Like I said, most folks are not used to hitting 100% on a regular basis. But if you want to get used to that, then I would focus on this presentation very closely, because those are based on real-time results. Now, with results that good, it doesn't take a genius to realize how quickly that can scale an account over time. In fact, with this dollar option shared with folks like you and me in real time, guys, this is including winners and losers from his real track record. Someone starting with $2,500 and never compounded a penny, just took every trade without compounding, they would have already seen $70,394 over the last 18 months. Let's give a little bit of a round of applause for $2,500 to 70 grand in the last 18 months of real trading. That is not something you see every day. That's net profits and losses combined together with a real live track record. For some people, that's a full-time salary. For others, that's a couple years of pension payments. But the beautiful thing with these dollar options is that you didn't have to work 5 days a week to make that happen. Just one quick trade at the beginning of the week, and you're all set. Your job is done. And the man behind it all, of course, is Graham Linman. And Graham is no snub when it comes to trading the stock market. Not only has he been actively trading since he was in diapers 15 years ago, but he has a unique knack for using mathematical driven odds to find unique ways to beat the market, much of what you guys have seen in the recent lessons we've been sharing. And by leveraging those odds, not only has he been able to more than double his Robinhood account in the last 6 months, posting north of $30,000 in profit, but then he did it again, more than doubling his 25 active trading account in Thinkorswim over a different time span. And according to him, the most powerful discovery he's ever come across is these dollar options. And that's why I want to make sure he was on today to walk you through how the dollar options work step by step. And then open the door, of course, the fun stuff for you to actually trade the next dollar option with him if you'd like to. So Graham, take it away from here, my friend. We've been leading up to this for a while. I'm excited. I think a lot of people are excited. And honestly, the real money 18-month track record you put together is phenomenal. It's not me blowing smoke. That's through a lot of crazy market conditions, and you have absolutely crushed it. And so I really think it's really impressive what you've done.
Well, thank you, Nate. Thanks for that very kind introduction. And I have to agree again, like you said, the reason we got into this whole profit factor spiel is because we saw the profits from this program. Said, oh my goodness, this is the best thing we've ever seen, or for me, best thing I've ever seen. There's a lot more to it. Now, I promise, guys, if you pay attention and take notes, you won't be disappointed today. And that's because I've uncovered what I truly believe is one of the most incredible stock market hacks that exists today. And I really mean a hack. It's one where you can start using it every single week to target doubles in your own account on some of the most popular stocks out there, all starting with as little as $1 single per contract. And that's important because if you can turn $1 into $2 in the stock market, well, then you have a legitimate chance to turn 500 into maybe 1,000, or turn 1,000 into 2,000, or even 2,500 into $5,000. You get the picture. And that's the cool part about these dollar options. While you don't need a big account to get started, anyone and everyone has a shot to start scaling their account over time, targeting the next double each and every week. For example, let's look at the dollar option I took on Meta in the first week of February this year. Now, back in February, the market conditions were definitely less than ideal, to say the least. S&P 500 had been stuck in a downwards chopping trend for weeks on end. And we had all sorts of negative news plaguing the markets, between that DeepSeek AI scare, if you guys remember that, and then the new tariffs coming into play. There were a lot of reasons for U.S. investors to be worried sick going into the new month of February. But to be honest with you, I really didn't care about the news. And that's because with the odds we have by rigging the options market over and over again with these dollar options, I knew that we had a shot to target double our money even while most stocks fell out of bed. So on February 3rd, I placed a quick trade on Meta, only $1.20 per contract to enter. And by Friday, I was automatically cashed out with a cool 108% return for the week. So that's enough to have turned $500 into 1,041 by Friday, or 1,000 into 2,083, always a double. Then the next week, it was no different. February 10th, I took the dollar option on ISRG. Now this time, the stock parked out for the week, gaining less than 1% on the underlying price. You can see the chop there. But by that Friday, it was more than enough to hand me a double yet again. Now that's enough to turn $1,000, doubled it into 2,000, or 2,000 into $4,000. Now, before we get too far along, I do want to be clear with you guys. Not every trade is going to work out. There's going to be big winners, small winners, and losers along the way. That's just how trading works. In fact, I'll even show you some of my losers today. And that's something that most so-called experts online would never do. They all avoid the losers. But that's because I want you to truly see just how powerful these dollar options are, even with the good, bad, and the ugly. Because by simply rigging the options market to to play the mathematical odds over and over again, we can see the results really start to stack up over time with the dollar options, even with those losers. For example, let's rewind back to the month of November. Now, let's say someone had $2,500 to start out. Now, keep in mind, in November, people were more uncertain than ever before. I think we talked about this here. As a matter of fact, there was a record amount of fear as the number of put option buyers exploded. CPC went spiking way high. Now, of course, none of that really mattered when it came to these dollar options, because you could have tuned out all of that noise and simply placed a quick trade week after week all month long. Now, for the month of November, folks following along went 3 for 4 on the trades, 3 winners, 1 loser. But if you did that, you had a chance to pocket an extra $3,650 in profit that month, including the loser, $3,600 for November. Well, now let's look at what happened in December, the next month. 2 for 3 that month. We took the last week off for Christmas and still managed to walk away with an extra $5,159 in profit for the month. So imagine that. Imagine taking the grandkids out Christmas shopping with an extra $5,000 padding the wallet. That would be nice. But we're not done yet, because January was the same exact thing. This time we were 3 for 4 that month on the dollar options. And when you net it all out, we had a shot to pocket a grand total of $4,490 in profit for January. Now, my point is that we don't need to win every single trade to make a good deal of money, because with the way we're gaming the options market here, we're not approaching these trades like your typical investor or guru. We're not staring at outdated technical indicators or reading boring financial statements. Instead, we're using a mathematical approach to help put the odds in our favor, kind of like what a casino does.
Well, if there's one person that I would trust to do that, it's definitely you. Let's not forget, you first started your trading career when you were a sophomore in high school. Okay, so not diapers, sophomore in high school. I misspoke earlier. Under the mentorship of a former banking VP. And that was the same year you happened to test out of college for math class, 6 years in advance. I mean, I'm a math guy, but Graham is really a math guy. Not just that, you're probably the only person I know who's nailed a perfect score in your math portion of the SAT, landing you a full ride to college, which is why you were quickly grabbed by 2 former Mega Million hedge fund managers to train under their wing and develop strategies for them. So when you first called me up and told me about the dollar options, although I was skeptical at first, I mean, some of those charts do not look like 100% gains. I had to listen. And while your real-time results are nothing short of incredible, it's the stories from your students following along that really caught my attention. Like Robinson, who said currently a member, up $5,000. Jennifer said, I've been trading for the past 7 weeks. I'm averaging $8,000 a week with the winners and losers combined. There's that winners and losers combined again. These have revolutionized my trading. Or like Charles said, up $19,000 this month. Keep it coming. So Graham, do you mind walking folks through the dollar options and how you're using them to actually rig the market week after week? Because like I said, most people are not even familiar with hitting consistent 100% gains.
Well, Nate, I would absolutely love to. Now, you guys have to understand that when I say options, most people assume I'm talking about just buying options and hope that a stock goes higher and higher and higher. And that's how most people trade options. But there's actually a big problem with trading options that way. And if you've been around my work, you know this. You see, when Wall Street lists these options and then sells them to us, they bake in another factor that makes it nearly impossible to consistently win with options. That's called time decay, or the time premiums. Now, the way time decay works is the longer you hold one of those options, the more the premium on your position is losing. It's decaying against you. So you can be totally right about the direction of a stock, but still lose money on the options because time decay is working against you. Now, if you're not familiar with options, don't worry. You don't really need to understand all of this to take advantage of these dollar options. But I do want to walk you through it because I want you to have that light bulb moment just like I did. It changed everything for me. You see, when Wall Street lists these options and sells them to you and me, they want those options to expire worthless. As a matter of fact, they're really good at it. One study by the CME reported that 76% of options expire worthless. And in another report, a contributing writer at the Financial Post studied options extensively, and you've probably heard this stat. Up to 90% of all options buyers actually lose money on their trades at expiration, even if they're right about the underlying move. And I've been there a million times before, and that's why I was so happy when I found these dollar options. Because Wall Street intentionally designed it this way, because when you lose, they win. So they set you up for failure by jacking up options prices with aggressive time decay baked in. That way your wins are few and far between, letting Wall Street keep most of that profit. Now, my point here is that most investors, they're not losing money on options because they're getting the direction wrong or bad at picking stocks, but they're most likely losing because the options are typically rigged against you. However, as I'll show you, thanks to a little known phenomenon hidden inside the options market, we're able to eliminate almost all of that time decay on our trades with these dollar options and gain what I truly believe is an unfair advantage on some of the best stocks out there. And that allows us to target right around 100% ROI each week, even when the stock barely moves. For example, let's take a look back at May 27th with one of my other trades on Meta. And yes, I do love trading the dollar options on Meta. Might even do it this week. Now, following the big April market correction, Meta was rebounding nicely, up about 20% on the stock. Now, most people, when they hear 20% in a month, they probably would have waited for a pullback or a better entry point, but not me. Because on May 27th, I jumped in with the dollar options on Meta, only $1.18 per contract. Now, over the course of the week, Meta didn't really make much of a move. In fact, it didn't even gain a full percent, just 0.8% on the share price. Now, let's say you $2,000 invested on this one. Well, with time decay working against you on the overpriced options, if you just bought calls like most people do, you would have lost 100% return on investment. You would have lost $2,000 as Meta didn't even make it close enough of a big move to break even, let alone doubling your investment. But with the dollar options, it was a completely different story. Even though Meta barely ticked higher that week, folks following along cashed in big, more than a double, a chance to pocket $2,237 in profit, more than doubling the investment in a week. And it was the same story with my other trade on Meta back in May. Actually, I had two here. The week of May 12th, Meta only gained, get this, 0.14%.
That's ridiculous.
Not 1.4%. That's 0.14%. Again, most options traders lost money. Time decay ate their investment away. They lost the full $2,000. But with the dollar options, which I got filled for $1.20 that week. You could have, again, doubled your money, $2,167 in your pocket by the end of the week. That's a 108% payout, while Meta only moved 0.14%.
Yeah, only about 800 times the underlying move on that one. It's insane. Those charts are crazy. I mean, that's why I got so excited when we first started even talking about the original idea that's even behind the system here. It's one thing to make 100% if a stock shoots higher, you time it exactly right. But to do it when it's literally hardly moving is insane. And between those two trades, which you share with folks in real time, again, these are all real track record trades. We're talking about the difference. Regular options, same time, same investment, everything the same, but a regular option loses $4,000, and instead you profited $4,404 on the very same timing, very same stock. That is a really big deal. It's like that. I always say the ability to turn losers into winners is the biggest advantage any regular trader can get. And so walking away with over $4,000 on two trades, especially when you consider how much people need an extra $4,000 right now, the same stuff that we've been hitting for months with inflation being as brutal as we've seen, sticky inflation, they call it, not going away, record numbers of retirees going back to work, record number of people picking up second jobs, record lows in savings, all of that stuff piling up at the same time. So I don't know about you, but I would personally much rather click a few buttons than sit at a desk for an extra 20 hours a week, especially when these dollar options give us the incredible upside. We're not talking about chipping away at 5% a week. We're talking about incredible upside, shooting for a double every single time. In this case, 2,167, as that ugly chart did a whole lot of nothing, and still paying even when it goes slow, even when it just kind of grinds sideways, and the same people trading regular options are losing money. So let's talk about, I think, what everyone's probably asking. Okay, how does a chart that moves 0.14% make us a double? How is that possible? And secondarily, you mentioned these dollar options were practically able to eliminate all the time decay that eats up most people's accounts. So is it a credit spread? Is that what we're doing? Maybe we're doing naked puts and actually using that premium on as our advantage. And, we just need about $1 million in our account and we'll be fine.
Well, no, we're not selling credit spreads or naked puts here or anything like that. Everything's risk defined. But funny enough, I actually discovered this new way to rig the options market by working on an income strategy for a former big-time hedge fund manager. You see, most savvy investors who know that buying